All right, guys, let's get into gold. Okay, we're gonna do analysis on gold, Bitcoin, and I might even throw in another couple pairs like some forex pairs or something. All right. Now this is the count I have. It's the same count I've had for the last couple of weeks. All right. So I've moved house, by the way, so I haven't got Wi-Fi. This is gonna be moving slow a bit. I'm using my phone data. The Wi-Fi should be connected tomorrow. Okay, so let's zoom out of here, and so you can see the whole count, the whole chart. All right, we've had a fifth wave in gold, potentially a fifth wave. So gold is due a retracement. All right. I know we had some bullish news today, which kind of turned bearish after what Trump said. Something about the tariffs on gold. I don't know. My fundamentals, the fundamentals doesn't affect how I trade the chart. I let the chart tell me what's going on. Okay. So we've got, you can see it's loading up slow, but it's okay. We've got 3, we've got 4, we've got 5. So how I see this from here, okay, we zoom into the most recent price action, and you can see that we've had a decline I've labeled as an A. Could be a W, okay? A, B, C, drop. Could be a W, could be an A, doesn't matter. B, okay? Now I'm looking for this C, which could come higher up, okay? If we are still bullish, I don't expect us to lose this low. Okay, we could manipulate the low and come back up. But if we was to like say go below, retest, continue with some closes below, then we're looking at a deeper retracement. Okay, what if we're looking to buy gold? We need to find support in this area where the green box is. Okay, if we lose this area, then we're looking for something deeper down, and we could be reaching these areas over here. Okay, but currently that's not my view. I do believe we probably will find support on this box, even if it's temporary and it just brings us back up to some supply, a high level of supply before maybe going down again. So yeah, this is the chart. This is my A, this is my B. Okay, then we've got A, B, or 1, 2, 1, 2. Either which way, I'm expecting further downside. Okay, downside action for this. If I zoom into, I do want to get rid of these drawings. They are unnecessary, but I can put them back on again. So I'm very clear about this movement here. Okay. Now there is a chance where this is a completed correction, and this is a 1, and we're looking for a 2 or an A, and we're looking for a 2 or a B to finish to get one more high before a drop. It's not what I believe is going to happen, and here's why. Okay. Now, first of all, the fourth wave is really short compared to the 2 wave. Also, once we've got this A, B, okay, we've basically we took this high, we've induced buyers, we've come back down. We didn't break this low over here, okay, but we got to well over 90% of it. If you see this low here, okay, and I'll put the crosshairs here, okay, that's almost equal lows. In fact, it's relative equal lows, okay. So there's built up liquidity here. There's an inefficiency here as well. Not only that, this move coming up is not an impulsive move. It's not a diagonal either, unless you're going to think about, nope, it's not even a expanded diagonal, because if it was, it would be 1, 2, 3, 4, 5, and the third wave would be the shortest. Third wave can't be the shortest in any diag or impulsive move. So that confirms that this move up is corrective, which means it's part of this move. So this and this is corrective, and we're looking for further down. We've also hit the supply zone, and now the daily has engulfed the previous up move here. Has broken, we've got a fractal break here. It's broken the low there. Okay, so to me, the daily is starting a bearish trend down. How far is another question. But as I've got this channel here in purple, I expect price to come down to the lower part of this channel at least. And then we've got an efficiency just over there. So it's likely to reach lower before coming higher. If I was to just draw the pathway, I'm thinking something like this. Something like this is what I'm looking for gold, okay? So we jump down into in fact, let's put on the indicators quickly, all right? The 50 EMA has not been touched yet. 1 hour and 14 minutes is likely we're going to get a bearish close below the 13 EMA on the daily time frame. That's another bearish indication. Jumping down to the 4-hour time frame so we can see some more detail, and I'll get rid of the indicators. Okay, so now even this last candle here, this last red candle before dropping, if you pay attention and you look closely, it's took the high of this bullish candle and engulfed it to the downside. Okay, that's extremely bearish to me. It didn't give us a close, but obviously, as you can see over here, we closed below it. So we manipulated and came back and dropped. So inside here to me is a redistribution. Yeah, it's like your drop, base, drop. This is a supply zone. I could drag this down to here, but I've drawn that off of a smaller time frame. So I'm going to leave it where it is right now. Okay, to me, if I get the drawings, oh yeah, I've removed it. Okay, so the count for me, if I just do it from here, would be 1, 2, 3. I've got the red lines on here. I don't want you to get confused. I'm going to quickly take them off. 1, 2, 3, 4, 5. So what I'm looking for is a B, and a C up into this area here. It could even go slightly higher, manipulating this wick here, tapping into this supply zone to go lower, and then that would just be because to me this whole move from here to down here is corrective. It's not impulsive to me, okay, because a couple reasons. All right, if we was to start say, obviously this is the high. If we come down here and take this as a 1, that can't be my 2, okay, because we've taken it out here twice. So if this is 1, this has to be 2. And if that's 2, the retracement has come up and hit the 0.886. The 0.886 is a rare retracement or a rare area for a 2 wave, and it's much more common for a B or an X wave. So probably, as you can see, 0.886 here, from there to the bottom of the potential 1. Okay, that's here. We came and we touched the 886. Okay, so we're basically 90% retracement. Okay, and that's what I'm going to put on the chart right now. We'll put on the 90% and have a look. Okay, we've touched the 90%. That is common in flats. Extremely rare for 2 waves. Okay, so that tells me sooner or later that high will get taken out. Okay, so to me this is a flat. Okay, and at 3, 3, then 1, 2, 3, 4, 5 could be finished. I think maybe it is. Okay, but then we're going to get a B, and a C. So I'm looking for something corrective coming up, either to here, most likely to here, but potentially slightly higher. Now this would be my B or my X wave to me. Okay, so we've got this flat correction here, 3, 3, 1, 2, 3, 4, 5. Okay, then I'm looking for a move like this. Okay, so we need to be vigilant when we're watching this. We need to make sure that when this coming up, this ends up being a 3. So we could get 5 in here, 3 in here, 5 in here. Okay, then at that point you might be thinking 1, 2, 3. But then at that point, we're going to watch the retracement. Okay, but how am I going to make it? See, if we get a 5-3-5, that could be a zigzag, or it could be a 1-2-3. Okay. Now there's going to be multiple ways in which to assess whether while it's coming up, you're getting a 1-2-3. Because common for a 3 is hitting the 1-6-1-8. Okay. If we get a 1-2 and an extension to the 1-6-1-8, okay, then at that point, if we get a retracement to like the 0.382 to 50% or the 0.236 in a 3, and then we get another 5 up, then obviously we're impulsing out of here. But just to let me just keep it simple. This to me is corrective. Eventually the high will get taken out. But what I believe is going to happen here is we're going to get a deeper retracement to the downside, as we've already identified on the daily time frame. So this, as much as I do believe this is finished, something's finished here, I believe the next move coming up is going to be a corrective move. I believe that corrective move is going to be an X wave. But whether it's a B wave or an X wave is irrelevant. It's still looking for a 3-wave structure to come up into supply, whether that be here or slightly higher, and then to engulf that move to the downside to get a deeper retracement and a longer retracement, okay, to the downside. I'm going to get these indicators off and leave the drawings on. Okay, we're looking for price to come down into this area. Now, how would I get involved in this chart? Easy. Well, yeah, go to the 1 hour time frame. On the 1 hour time frame, we're going to see this move that we've got coming down, and we're going to see the waves clearer. Okay, and I'm going to show you that we've created a bullish OB, bullish order block, okay, which is right here, that I've got the green box there, okay. The middle line is the midline of the box, okay. So we've gone and we swiped the lows. There's a diagonal in here, an ending structure move, a diagonal in here, okay. So 1, 2, 3, 4, and 5. 4 goes into the price territory of 1, okay. All the rules were respected in this diag. That's an ending move. Another thing about a diag, okay, is that you'll end up with way more than 90%. You'll end up with bearish divergence. I mean bullish divergence, okay. If you see this low here is the lowest low. It came below this low over here, okay. And that, if I just widen it so it's clearer, all right. This is the lowest low, this low here. If you look on the TDI, it's higher up. The 2 hour shows it much clearer than on the 1 hour. Okay, so if we look, and I just take those lines off the chart, just so you can see it with a bit more clarity. That green wick is the lowest wick. You can see it took the red one on its side. If you look at the TDI, the lowest point is this wick. We've had 1, 2, 3 lows since, and all those lows have stayed higher. They've made higher highs on the TDI. So we've got bullish divergence, okay? That would be the same on the RSI, and that would be the same on the MACD, okay? So there's bullish divergence here. We got a bullish candle close up here, a bullish candle that closed strong up here. What I'm looking for now we have this order block as well, back to the 1 hour time frame. There's a 3-wave move coming down into this green box, okay. Again, when this move ends inside this green box, we're likely to see bullish divergence. Bullish divergence will be another confirmation, okay, when this comes in. If this comes in as a 3, okay, not as a 5 wave, you can have a 5, then a 3, then a 5. So overall, it'll be a 3. That will prove to me that this is corrective. So somewhere in this box, I'm expecting to get bullish divergence. I'm looking to see accumulation. I'm looking to see everything that suggests to me it's going to go higher. Okay. Mind you, remember, I'm bearish on gold. But this move to me is an A This is going to be our B wave, and then we're looking for a C wave. That might make an A. That might be complete, or it might make an A. Then we get another 3. Then we get another 3 for a bigger A, B, C, or a W, X, Y. So now, currently, I'm looking for price to go higher. Before taking out this low, I'm looking for price to go higher. If price would take out this low first, then I would be wrong. I'd have to reassess, and I wouldn't take a short because I'm still thinking sooner or later we're going to get that move higher up. So for gold, corrective due to the 90% hit. I'm looking at this as a flat. Okay, a 3, a 1, 2, 3, then a 1, 2, 3, 4, 5 with an ending diagonal. Here's a A, here's a B, looking for a C, and then to take this price down. What else could I see here? Ah, great, excellent. If we use the market maker method, okay, you can call this an M formation. Price breaks down. If you notice, this was a high volume candle. We've gone below it, closed below it. Price breaks down. The 13 crosses the 50 EMA. So if we apply the market maker method, when we get these conditions, okay, an M formation, a peak, a multi-session, a multi-day M formation, okay. This started on Thursday, ends on today, Sunday, sorry, okay. Or you could say Monday. We're Monday down here, right? Today. So after we've had this, we've had the 13 EMA cross the 50. So with the market maker method, what we now expect price to do is get up, cross over the 50, trap at the 50, and drop again. Okay, so the market maker method aligns with the Elliott wave. It aligns with the supply. Yeah, going back to supply because we've broken structure. Sellers are now in the market. Okay, and the way we broke structure, you can just see we came down this red candle, made equal lows, pulled up, took it, came up, induced some buyers, came down, took them again, induced buyers again, took it again, pulled up again, and finally took it again in this green candle. Yeah, so kept on inducing sellers just to pull back in the range. Now price could go down again. I don't believe that's what's going to happen. I believe we're going to come up here, see the 50 EMA, trap at the 50 EMA. When I say trap, okay, we can come up, reach the 50 EMA, pull down, induce sellers, pull back up again, take them out, and then drop. That's what I mean by trap at the 50 EMA. Okay, something like that at the 50 EMA. So the 50 EMA is going to cross there. Some kind of up, down, up, dump. So that's my analysis for gold. I'm pretty sure on it. If prices going sideways around here, wasting time, say it gets to 11 or 12 o'clock in the Asian session, I'm likely to take the buy up here. Okay, if price shoots up there or whatever, goes sideways, I'll look for the sells. Okay, we might not get much movement in the Asian session, but we could. We've got news on Tuesday at 1:30, tomorrow at 1:30, and we're gonna go and look at Bitcoin now. And I'm looking to buy Bitcoin maybe not too long from now, to be honest with you. We'll jump to the hour time frame for now. And it's pretty clear that Bitcoin's been, moving strong to the upside. Okay. Looking for what type of, so I'm bullish. Right now, I'm only considering and looking for bullish moves to the upside. Okay. So everything that's happening here, I'm assessing it to how do I get in for the next move up? Okay, I've been part of a lot of the moves up and I scalp. So I get in and I get out. Okay, this is my 1, my 2. In here again, I've got another 1, another 2, a 3, okay, And this 4 here, we cannot overlap the price action of 1. That's the first thing. We cannot overlap the price action of 1. So if I draw the line over there, we know that this is wrong should we touch that line. Another thing we can't do is hit the 0.618 fib from 2. Now 2 could be here, but I've got it as here. We'll put that, the fibs on over here. Okay, 0.618 has been hit if you put 2 here. So that leaves us, like, if this is our 2, that leaves us with 1 alternative. If this is bullish, okay, it could be a diagonal 1, 2, 3, 4, 5. If it's a diag, then price is gonna have to come down here and touch the red line, okay, because it's a requirement for a diag. I've been told there are cases where a diag doesn't overlap the 1, but that's rare. It's not what you should be looking for, and it's certainly not what I would trade. Okay, I need to see what is common. We're trading probabilities. Okay, if you want to trade probabilities, you're gonna need to, you know, to use probabilities, you're gonna need to know what you're looking at, right? So if this doesn't come and touch here, I'm not gonna assume it's a diag. Okay, if this was to carry on, say for argument's sake, break this structure and keep going higher, then that's going to make me believe that the 2 ended here. Okay, and if I put the fibs here, that's going to make me believe that the 2 ended here. Okay, and we got another 1, 2, 3, 4, 5 like this, or 1, 2, 1, 2. You know, I'll come up with the count for it. But at the same time, if that is going to be the 2, we can't hit this 1618 over here. So if we come down, we touch this 1618, I'm definitely going to be anticipating price touching here, because we've invalidated the 4 at that point, and there'll be no way we can count a 1, 2, 3, 4. So I'm going to be like, okay, that 4 is going to be a 4 which is a part of a diagonal, which then means we must touch this red line before going higher. Okay, which it's looking like it's potentially the case. It looks like we're going to go up for a 5 as a diagonal and then drop. I mean, yeah, make another high and then drop. Now if I get my channel, okay, corrective, it helps you follow the corrective moves. Okay, if this is A and this is B, it'll be a 5-3-5 zigzag, hence why the correction is deep. Okay, so I would be expecting, this is actually my primary right now. While I'm looking at it and I'm thinking about it, I actually expect price to come down here. I expect price to get to the bottom of this channel, to touch this red line, to give us an accumulation, and then I'll be buying it to take out this high. Okay, and if I was to draw out the lines for the diagonal, okay, it would go from there to there, and then why did they just move the chart like that? That's weird. And I'd be faced with an expanding diagonal, which makes sense. It's the rarest diagonal, I'll admit. But it makes sense because I believe that third wave is longer than the first wave. And if that third wave is longer than the first wave, it can happen in the contracting diagonal of the new rules of Elliott Wave via Elliott Wave International. Yeah, as you can see, okay, this is the 1-to-1. The third wave is longer than the first wave, okay? But obviously, if it touches this 4, it's not an impulse, it's a diag. As you can see by the lines and by the third wave being longer than the first wave. And if we come down here and touch there, accumulate and go higher, it looks like we're getting an expanding diagonal over here. Okay. The only other thing I can think of, which I think is less likely, but would make for a much stronger bullish case, is if we had a double 1-2s base or triple 1-2s over here. Okay, so over here we could say 1-2, 1-2, 1-2, and then you get your third wave. If that was to happen, then Bitcoin would be mega bullish, basically. Absolutely be ripping it to the skies. Because after that, if you got a 1-2, 1-2, 1-2, you're gonna need a 3-4, 5-4, 5-4, 5. That's a lot of upside. So that is my analysis on gold. That is my analysis on Bitcoin currently. Okay, expecting much more upside on Bitcoin, expecting a bit of upside on gold, and then quite a bit more downside. And I want to bring you in on something that I'm looking to buy if it lines up. Okay, Recursion Pharmaceuticals. I've featured this a few times. All right, for Recursion Pharmaceuticals, I just need to see an accumulation in this zone. I need price to not take out this low, not get to like 90% of its low. Give me an accumulation in this zone and come up. Okay, break this structure, and I'm a buyer. Let me just show you quickly the higher time frame. Okay, you can see how we've been dumping. All right. Now, I believe in this stock. I do believe this stock is going to do well. Let me just show you what we've done as well. To the left, we've taken the last low from November 2023. Actually, May 2023. Okay, we've got a break of structure to the upside. Almost there, but we got it here. We're coming down correctively. Okay, there's no clear impulse here. That 4 has overlapped the 1. Okay, there's an 88.6 hit here. Okay, this looks corrective to me. I'm sure it will fit in the channel nicely. I've already got one on the chart. Very messy chart. As you can see from my count, I've got 1, 2, 1, 2. To me, it's either another 1, 2, then 3, or we have A, B, and then we got 1, 2, 3, 4. Like, so we could be getting a diagonal. If it was a diagonal, it would go like this. Okay. Either which way. Okay. This all for me boils down to what happens here. Okay. If we get an accumulation here, which simply means sideways price action that leads to another high. But if you're looking in the details, if you studied Wyckoff, you'll notice, you know, your preliminary supply, your secondary test, your spring, if you get a spring, and those things there. So on a lower time frame, I'll be paying attention, looking out for those things, so that I could potentially catch a buy in this area to take price to some new highs, some new all-time highs. I mean, I'm likely to get out in this area or take some heavy partials and wait for a retracement before getting back in. Because I scalp, I'm not going to just hold it and leave it like that. I don't see the point of watching my balance come down when I'm already anticipating price to go down. I'd rather take my money off the table and even look for another opportunity. I mean, I could just take my thing off the table and jump into ARK. Another thing I'm watching. Okay. So thank you for everything. Thank you. Please like, share, comment, subscribe. Tomorrow I'll be doing my analysis on all the forex pairs. I might even do that tonight. Okay. So yeah, take care and peace.